When it comes to swing trading strategies that work for beginners, we want to look at things that predict big moves. If you want to learn how to swing trade with less than $10,000 or even just a few $1,000s that you have saved up, then this video will show you how to make $100 a day in the stock market. Tom Bukowski rated this strategy #1 in his 1,000-page book titled Encyclopedia of Chart Patterns, and for a good reason. William O'Neill, author of How to Make Money in Stocks, called it one of the strongest of all patterns. And by the way, guys, we just created a brand new Facebook group where I'm going to be putting some of my stock picks and showing you guys a little bit more of the behind the scenes that I can't just throw up on YouTube as easily. So make sure you click the link below to join that. We're going to go over lots of examples of what it's actually going to look like, but for now, let's look at the 3 stages of the flag breakout pattern. So stage 1, price moves sharply upward, forming the flagpole. This should happen in less than 2 months, okay? If it's not in less than 2 months, if it's forming over 6 months or a year, it's not really the best for swing trading. Stage 2, a consolidation pattern forms after the rapid rise higher. It can look like a flag or a pennant as long as there's a pause in the price rise. Stage 3, the price breaks out. This pattern is confirmed once the stock or commodity closes above the highest peak in the pattern. So now let's look at actual examples. Here it is with ticker symbol EXK. After a quick 80% jump over 8 trading days, the flagpole is in place. This blue line here you can see kind of looks like, a straight line. It's a pole, a flagpole. So following the flagpole formation, price begins to consolidate and form a flag. You will likely see decreased volume during this period of time. After this, finally, the pattern was confirmed once the stock broke above the highest point in the flag pattern. And when this takes place, we have a very clear buy opportunity with virtually unlimited profit potential. Now, this is especially true if there's a powerful trend behind us on the longer term charts. Here's one more example from Medicinova, MNOV. This pattern happens over and over again. If you're kind of picky about when you get into it, you wait for the confirmation, which is what we're going to talk about next, is how do you know, okay, it's actually going to break out? If you do all of that, it's going to be extremely consistent and one of the best swing trading strategies in 2020 for you to make at least $100 a day. Now let's look at an example that's currently going on. This one is in Tesla. Okay guys, depending on when you watch this video, this still might be an opportunity if you see it this weekend that I'm putting it out. If not, you can still learn from it. But this is definitely what my Facebook group is for, is me calling out these plays the morning of or while it's happening. In this situation here, we see the flagpole, which it's like an $80 move up from Tesla in a few days. So this is definitely, a pole. It's even missing a part of it. That's how extreme it is. And then we see the flag, right? So you have a couple of options of when you're actually going to enter the play. So that's what we're going to talk about now. These patterns do require a little bit of patience when you're first watching them develop, right? You can't just get in as soon as you see this big move up without any confirmation. So once you see this pattern start to form, what you want to do is start drawing your trend lines. So if it's an uptrending pattern, the pullback is going to be downtrending, right? So you're going to draw your trend line on the top of the candles. See how this is almost a perfect line right here? So this is your trend line. And you're going to use this as a potential breakout point and also a potential stop loss point. Now, if you don't know what a stop loss is, that just means you're going to sell a stock at a certain price when it gets there because you don't want to hold it if it goes lower. It's essentially to minimize your losses. With this pattern, you have 2 options of when to get in. So just really quickly, what this actually means, if you think about it logically, there's a big spike up. People are talking about it, right? Holy, Tesla went wild. people want to get in, but they want to wait for a pullback. So they want to wait till, this hit a high of around 900. Now it's, around 880. And also people know that this pattern exists. So people are going to be watching for this. People are waiting for a pullback. And then once they see that the pullback is over and this breaks the trend, right? This trend line here, once this is broken, people say, okay, now it's ready to continue up. Now it's ready to keep going. And it's sort of a fulfilling prophecy because everyone's waiting for it to happen. Your options when to get in are either as soon as it breaks this trend line, right? As soon as it breaks this line. So if I'm doing this on the weekend, so if on Monday, it pops up here, then you just get in. So if you're buying call options or you're going long on the stock, meaning you're just buying the stock to hold it, thinking it goes up, then you get in here. Your other option is you wait until it breaks the high, right? The high of the flag. This is the high of the flagpole. You wouldn't get in if you're doing this option. You wouldn't get in just as soon as it breaks above this. You would wait until it broke all the way above this line here, and then you would get in. That can be good. If you do wait for it to break above this line, you're going to have a higher win percentage because you're having more confirmation that it's actually breaking out. However, you're going to miss out on a good amount of the move. In this case, about $20 of movement, which is massive, especially if you're doing options. So it's really up to you. I'll tell you what I do as a more kind of experienced trader and just trying both ways. I do above the trend line. As soon as it breaks above the trend line and it stays above it for 5 minutes. So if I'm on a 5-minute candlestick and it stays above this trend line for 5 minutes, then I go in, then I go long. The ability to manage your potential loss using this setup is another thing that makes this one of the best strategies. These flag patterns, you basically have two options for your stop loss as well. The one's tighter stop loss, which again just means if the trade's going against you, that's where you're going to get out and stop holding it. So the more conservative one is just this line here. So if it breaks above, you get in, or even it breaks above here and you get in. Then if it comes back down to this line, right, you get a red candlestick that breaks below here, then you just get out. And you say, okay, I was wrong and maybe I'll wait for more confirmation and get in another time, but you don't hold it. The second option is the low of the flag, one of the candles in the flag. So remember this part here is the flag, right? This is the pole. So the low of the flag would be here in this particular case. So that gives you a little bit more room, because what can happen is if this is forming still and this is going up, down, up, down, up, down, right? It can pop over for like a second and come back down and then break out. So if you do a stop loss really tight, you're going to get maybe knocked out before the actual move up. So you're taking on more risk if you put your stop loss all the way down here, but you're also minimizing your risk of missing the breakout if it's, going crazy and then it goes up. Because a lot of times these patterns won't be picture perfect. If you Google bull flag pattern or, flag breakout, it will look like exact, the stock's in this perfect thing and then it breaks out above the top and it shoots up. But a lot of the times it will actually go up here a little bit. It will come down here. It might even break this for a second, come back around, right? So I prefer having a larger stop loss. I also do options a lot of the time. So if I'm right on a breakout with Tesla, for example, and I'm buying, an at the money call option, and I can get a $20, $30, $40, $50 move on Tesla, I'm gonna make, if I'm putting in $5,000 in the trade, I'm gonna make $10,000 or $15,000 back on that one move. So I'll risk a few $100s with the lower stop loss because the reward is so potentially great. So you have to decide your risk tolerance, but those are your options, right? The trend line or the low of the candle. I recommend the low of the candle personally. So the final thing to keep in mind with this pattern is you want to make sure your reward to risk is at least 2 to 3 times. So how you determine that is where is the next big resistance. So if you're looking at a breakout, here we're at around 890. The next big resistance is up here. This might be hard to see, so I'll zoom in. The next big resistance is over here at about 940. So that's enough room. That's a lot of room. It doesn't look like a lot, but that's a ton, right? You have to look where your stop loss could be. If our stop loss is at the low of the candle, that's about 860. We're at 885, so that's $25 stop loss. That is a lot, but if you're swing trading and you're looking for a $50, $60 move, then you still have 2 to 1 risk to reward. And obviously you can do a tighter stop loss. You can do a $5 stop loss, and then you'll be looking for at least a $10 move, okay? When you're swing trading and you're trying to make $100, $500 a day, or $1,000 a week, which is what I aim for, then you're gonna need to take a little bit of risk in order to give yourself enough time and the stock enough time to get really big moves. You might make your $2,000 to $5,000 a month in one move. Like if this breakout pattern does happen, which, you know, if you're seeing this in time, it looks pretty good to me. You can get in on a $50 move, right? If you're buying an option for $1,000, it's gonna be $3,000, $4,000, $5,000 if that happens. I just want to thank you guys so much for the growth that my channel has seen in the last little while. Again, check out that Facebook group where I kind of post setups like this a little bit more regularly. It takes, you know, a bit of time to do a video every time. So thank you for the growth though. It's been awesome, and I hope you guys subscribe and stay tuned because there's a lot more things coming out.